This is the February market report for Southeast Michigan, and there really weren't any big surprises this January and the first part of February in terms of what we expected the market to be. There are enough positive economic tailwinds pushing forward in terms of low interest rates and job growth that are keeping the industry moving along as far as demand for housing in the marketplace. We did see the month supply of inventory slide down a little bit, which is a good thing. That's at least for sellers. That means that although there have been more homes put on the market in the last 60 days than a year ago, there have been more sales as well. So the result is demand is a little bit tighter. So most of that is in the under $250,000 price range, where sellers will benefit from that. A little more competition, buyers chasing the properties. In the over 250 market, you'll see a little quieter market, and that's really what we've been seeing for the last few months. What you've noticed, what you will notice, is, for example, the number of contracts written in January was up 18% over last January. Now, almost all of that is weather related, because if you go to last January, the number of sales in last January compared to the prior January was down 18%. So you net those two out, and we're about back to where we were without the weather issues. You can expect probably the same sort of good news in February and March in terms of the weather being better this year, although right now it's relatively cold and certainly is having an impact like last year on sales. But more than anything, it was really the snow that slowed things down last year, people being able to get around. So we think that February and March this year will show some really good numbers compared to last year. But that's really masking the fact that the market is good and is strong, but a lot of that pent-up demand was released early 2000, up through June of 2014 and heavily into 2013. So we don't expect to see explosive activity like we did in those years. But with inventory still, although stronger, still light from a historical perspective, and some pent-up demand still out there, we think that this spring will be pretty strong, and you can still expect, for the right properties in the right location and condition, those multiple offers. One of the things that we looked at from an economic standpoint is, and a couple of the good things, is that household net worth is actually higher than it was pre-recession. And also, if you look specifically to Michigan, Comerica does an economic activity report, and the activity report that they show, they took a lot of factors to what's going on in the economy, is even higher than it was pre-recession as well. So that gives us some really good momentum for the marketplace. Now, within that net worth issue for each household is a combination of home equities and stocks and bonds that what other people hold, and it really is the home equity piece that drives people's decision to, particularly for move-up buyers. And the market is still about 20% off of peak 2005 levels. So the silver lining in that is that over the next few years, as home values continue to rise, those people that have been waiting, and there's a lot of people that have been waiting to sell, waiting for their equities to rise back up to where they were in 2005 and 6, they'll start to sell. So in spite of the fact that we've had really good markets for the last few years, in reality they actually could have been better as that demand is being released. So we think going forward for the next couple of years, not just 2015 but beyond, that steady demand will, release of demand from sellers that have been holding off, will be sort of a little extra bit of juice to keep the market going better than we would normally expect. There still are all the issues of interest rates and all the things that might affect overall demand for housing over the next few years, but overall the outlook is very good, and certainly coming into this year it's good, and going into February it is strong as well. Although again, with the cold weather we've had, we can probably expect a little slowing down, and maybe February being sort of close to what last February was. I still think it'll be a little bit better, but overall still good news in the market.